Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back.
Jim, pleasure to be back.
John, you just came back from a vacation in the East Sierra. This is your third trip to the Mammoth Lakes area. What keeps pulling you to that part of the Sierra?
Jim, that's a good question because it's at least a 6-hour drive from the Bay Area to Mammoth Lakes. And it's especially complicated these days because the most efficient road is the Tioga Pass that goes through Yosemite, but you need to pay a $2 reservation fee to be able to just pass through, and those reservations are almost always sold out if you think about it at the last minute. Now, one reason we like to go to the Mammoth Lakes area is because we have a family member living in the area. But for me, the overwhelming reason is that the East Sierra is dramatically different from the West Sierra. Now, the approach to Lake Tahoe or Yosemite, it's a gradual climb, first through the foothills, past places like Auburn and Sonora, and then you go through a long climb through a forested landscape until you finally start seeing the mountaintops. Yosemite is about 4,000 feet above sea level, while Lake Tahoe is around 6,000 feet. And the highest you have to climb to have your car is just over 6,000 feet. But to get to the other side of the Sierra, to the Nevada side, there you have to go at least 8,000 feet. Now, the granite mountaintops of the West Sierra and its valleys like Yosemite, they are spectacular. But really, it's nothing compared to the East Sierra, which has a north-south fault that separates it from Nevada's Walker Lane and the Basin and Range topography farther east. Now, this fault, and it's a big structural fault that goes for, almost 1,000 kilometers, something like that. And it's responsible for two key differences. First, it makes the descent from the 8,000, 12,000 foot high mountains very abrupt versus the gradual ascent from the west. And when you get down to it, you hit the Highway 395, which also runs all the way from Oregon to Los Angeles. And it runs through valleys that separate the towering Sierra to the west and the lower mountain ranges of the Walker Lane to the east. So the East Sierra is truly majestic compared to the West Sierra. Now, the fault is also the second reason why the East Sierra is so different. The Sierra Nevada is a granite batholith that formed over 40 million years ago. You do not see sharp mountain peaks in the Sierra itself because they've been shaved down by erosion and glaciation. But the fault on the east side has been a gateway for volcanic activity during the past million years. And I say million years, 1 million years. That's not long ago. That part from Mono Lake to Bishop, it's a huge, colorful mess of granitic and volcanic rock. And because the volcanics are less than 1 million years old, these mountains tend to have sharper peaks and ridges than farther inland in the middle of the Sierra, where Tahoe and Yosemite is located. And the Mammoth Lakes area itself, and it's famous as a ski resort, but it borders on the Long Valley Caldera, which was a supervolcano that blew up 700,000 years ago. And that magmatic dome under Long Valley, it's still alive, which is evident with lots of hot springs in the area, and it could become a supervolcano in the sense that Yellowstone itself could become a supervolcano, and that would obviously be devastating for an area much larger than Mammoth Lakes. Now, I love the Mammoth Lakes area because it is a geological wonderland. There are those strange tufa spires at the Mono Lake, which grow through an interaction of bubbling springs with dissolved calcite in it and the interaction with various bacteria. And very close to Mono Lake is the Panem crater, which is only 600 to 700 years old. And it gives you a fantastic 360-degree view of that whole area. And it's got a cone, the original cone, plus the ring of explosive material surrounding it. It's about, if you walk the circumference, it's about 1.5 miles long, takes about an hour. And my wife and I, as part of our ritual, when we come back, go home from the Mammoth Lakes area, we go there in the morning when it's not so hot, and we do this just as sort of a final walk around, and you get fantastic views of everything. And then there's also other mini volcanoes that you can explore. There's the Obsidian Dome, which is fascinating to climb all over, and the Aeolian Buttes. And there used to be a lot of pumice in this area. I remember back in 1996 on a field trip to Nevada where we were looking at various gold projects in the Tonopah region. We ended up driving along 395 to get back to Reno to drop off the rental car and fly back home. And we managed to stop at something called Mono Crater Vista Point, and it's just south of Mono Lake. And you can see all these different craters and domes and things that are in the valley leading up to Mono Lake. And what was fantastic way back then was you could pick up huge boulders, 2-foot wide boulder of pumice, and literally put it above your head. And pumice, it's not like your lava with the vesicles in it, vesicular lava, which is quite heavy. Pumice is actually exploded material that has then fused with many, many, many tiny air pockets. And that gives it a density of around 0.5 specific gravity, which means that a cubic meter of pumice weighs half of what a cubic meter of water does. In fact, pumice will actually float if you drop it onto water. And we finally found this place. I wanted to see this place again. And at the time, 25 years ago, there were lots of people there, cars pulled into the lot for this Vista Point. And people picked up the boulders and that. But when we finally found it, the whole thing was deserted. The signs were with the plastic on it. It had been sort of crazed by the sun and the heat, so that you couldn't even read the geological words explaining everything underneath it. And the biggest piece of pumice I could find was about a 1-inch piece. So I guess when I was there in 1996, that must have been peak pumice, because every last block of pumice has been hauled off by tourists in the past 25 years. And now it is this deserted vista spot that nobody goes to. The signs are neglected, which is sad, because it's an incredible geological site to just gaze out over the valley and see all this stuff. Some of it's like only 500-600 years old, indicating what the dynamic region this part of the eastern Sierra is. And the other place that's fascinating there is in the middle of Long Valley. They have created a geological site called Hot Creek, and this one they actually maintain, perhaps because visually it's spectacular. And there's a number of other hot springs in that whole valley, again with this huge panoramic view where you look at all these very high mountains around you. And another reason that we like to go to the Mammoth Lakes area is there's spectacular trails on there that take you up into these alpine lakes. But again, it's the colorful volcanic rocks that are, intermingled with what's left of the granite in this area that makes this such a visually spectacular area. And the big hike we did this year was we went to the Chocolate Lakes area, and this involves about a 7.5-mile round trip hike. To get up to it, it's about 2.5-3 miles, 1,200 feet, 10,000-foot elevation. I only made it to the third Chocolate Lake. By then, I was just completely out of it. Hiking at that elevation without being acclimatized, it's way too much. So I had to turn back while the others continued the loop and got to go past this 400-foot brutal ascent to get to the other side and come back down. But again, the visuals are absolutely spectacular in this whole region between Bishop and Mammoth Lakes. And next year on our list is the Crowley Columns, which are on the east side of the Crowley Reservoir. We considered going there this year, but I heard that, you should do it later in the year when the water is lower. apparently the drought has made the water lower. We could have gone. It requires a pretty tough 4-mile round trip hike in blazing sun. But from the photos that I've seen, this is another geological wonder that one has to see. So the Mammoth Lakes area, Bishop, Mono Lake, the East Sierra, if you're into geology and understand what all this stuff means, it is definitely preferable for me to visit than to be in Yosemite Valley, which is spectacular in its own right, but not so much in the geological sense as the East Sierra.
How did the Kaiser Favorites do during the first half of the year?
Well, it's not been a particularly good year. Those 8 favorites are down 19%, which is worse than the Dow is down at 14%, but similar to the 20% that the S&P 500 is down. It's better than the 38% which the TSX Venture Index is down, and much better than the stars of last year, such as Tesla down 40%, Bitcoin down 56%, and really a lot better than Canadian superstars from the past couple of years. Hive Blockchain, which is the crypto miner, which is down 75%, and Canopy Growth, whose symbol weed tells you what they produce, it's also down 75%. And gold, in contrast, is down only 7%. Now, why are we dealing with this situation where resource juniors, which is what my 8 favorites are all about, are down 19% over the year? Well, we have the general equity markets, which have been sagging, and inflation hit 9.1% in June, and they're now expecting more interest rate hikes to try and contain inflation that just doesn't want to relent. And everybody's looking at this big picture and saying they will probably engineer a hard landing. They'll overdo it. The global economy will go into a slowdown. China has already got a self-inflicted slowdown with lower GDP growth because of its zero COVID policy. And of course, we have the ongoing Russian invasion of Ukraine, which is disrupting supply chains elsewhere and causing inflationary pressures. And everybody's feeling we need to increase interest rates in order to contain this inflation. So there's this general expectation that everything is headed downhill. And to a large degree, the resource juniors are tracking this negative mood. And to really appreciate the situation, consider the TSX Venture, which has about 2,000 listings, just over half of which qualify as resource listings. And since 2011, non-resource listings have dominated the trading activity in terms of value on the TSX Venture Exchange. There were a couple spikes in 2018, but the absolute blow-off was in early 2021 last year when it spiked to the highest level ever. And since then, there has been a changing of the sort of guard, one might say, where the non-resource listings, the value traded has absolutely collapsed. Since December, the resource listings, they've represented 50 to 70% of daily traded value, with the odd day as an exception. But that doesn't really even show how brutal the decline in non-resource listing traded value has been, because during the last quarter, we have seen the resource issuers also undergo a declining value traded. So we have this market, everybody's pulling back from the higher risk ventures. Clearly they are still favoring the resource sector because the context for a boom in resource sector prices, it remains very positive, even for a negative global economic scenario, because the backdrop is still this conflict between China in the United States, autocracy versus democracy. It's not going away anytime soon. And of course, in Russia's situation, we have potential catastrophe for Europe next winter when they still don't have any gas, when Putin's still in charge, and Putin then pushes the envelope even further and perhaps annexes Lithuania and challenges NATO and says, well, are you really going to push back at me? Remember, I have all my nukes and I don't care. It's the end of my life. I'm an end timer, so I dare you to do anything about me, annexing the rest of Europe and the Europeans themselves. Well, they will not want to really make the sacrifices needed to push back against Putin's invasion. So we have a situation where the supply of raw materials from global sources, it's not really going to continue. And so there's a good reason to be bullish for the resource juniors, but clearly the liquidity as people pull money out of the sector, out of the market in general, that's hurting the juniors, and they're pretty much roadkill in what is happening on the global scene.
Perpetua Gold and Galway metals are down 37% and 34%. Do you think they're close to bottom?
They should be close to bottom. I mean, Perpetua Gold is suffering because the market believes that the U.S. Forest Service is just stringing the company along, getting them to spend money in this perpetual permitting cycle for the stibnite gold antimony mine, which would produce 350,000 ounces of gold annually and enough antimony to share with all the Western allies of the United States if Chinese supply, which is 85% of global supply, suddenly became unavailable. At $1,700 gold, the project is still feasible, but the big question worrying the market now is how much has CapEx and OpEx gone up since the feasibility study was released in late 2020, when we still had less than 2% inflation. So at some point there's going to have to be an update telling us what is the new cost structure for the stibnite project, and does it work at $1,700 gold, where gold is right now. I tend to look at Perpetua Gold as a leveraged bet on higher gold prices. And higher gold prices will emerge if America's status as sort of the superpower that keeps Russia and China at bay and continues to preserve democracy. If that ends up falling apart, then we could see gold start to rise. And then we could also see an urgency develop to get a gold and antimony mine in the United States permitted. But really, in terms of exploration, nothing like that is happening with Perpetua Gold. I think the gold price is probably not going to go too much lower. It may want to hold this $1,700 level. So with the stock itself retreating off with investor fatigue over the permitting cycle, it might be a good time to buy that now and just hold it as a leveraged bet on gold finally getting back an uptrend. Galway Metals is different because it is also still an exploration play. They delivered a resource estimate of 2 million plus ounces earlier this year. They bit the bullet and raised enough money to continue their next stage of exploration. And their vision is that there's a 5 to 10 million ounce district of gold mineralization within this intrusive related gold system complex in New Brunswick. I did a outcome visualization where I borrowed the feasibility study numbers from the Marathon Gold's Valentine project in Newfoundland, and they're planning a 7,000 ton per day open pit mine. If I apply this to the open pit portion of the 2 million ounce Clarence Stream resource, it would produce about 1.4 million ounces, and at $1,700 gold in that sort of similar mining scenario, the NPV would be about Canadian 570 million, which would translate into a future $2.59 share price. So that would be 5-6 times more than where they are now. But that doesn't take into account the possibility that they really start discovering a lot more zones that delineate themselves very quickly. So there is this discovery resource expansion upside that is not present at Perpetua Gold, which is a reason why, if right now I had to choose between Perpetua and Galway Gold, I would choose Galway Gold, because if gold starts trending up, the Galway Metals, the market will respond to it. You get the bonus of exploration results. Whereas with Perpetua gold, even if gold starts moving up, the market will still say yes, but will they ever get a permit for the Stibnite project?
Aurion Resources and Eskay Mining are both gold exploration juniors that are down 56% and 34%. What do you think of them at current levels?
Well, last week I talked about Eskay Mining, which had just published an update from its exploration work on the Eskay project in the Golden Triangle. Part of the news did not impress me. The Jeff area where they did all the initial drilling, they don't seem to have yet hit that breakthrough discovery hole that signals, wow, we got a 21B zone. And the pricing of this company, even though it's down 35% or whatever, it's still reflecting a hefty expectation that Eskay Creek 2 will be found. And if it is found, that would ultimately mean a $15 to $20 price for Eskay Mining. So you can see why this stock has a fairly high valuation given the geological context. What got me excited about last week's press release was their discussion of the Scarlet Ridge area where a drill is heading to now. And that's an area where this is brand new territory on this big property, 30-kilometer long property that they have, which has never been properly explored for these VMS systems. And it's clear from the way John Decker talks about it that, wow, if they're going to find a big one, a 21B zone, it's going to be in this area. And they will have a drill going in the TV area where they had somewhat better results than in the Jeff area last year and the year before. But we won't know about that for another 4 or 6 weeks if there's any visuals worth talking about. If the Jeff area delivers any intersections, any intervals, it probably won't move the market because it's still missing a geological context that says, oh, there's a big tonnage footprint here. So we're probably looking late August before we hear anything about what might have been accomplished at the Scarlet Ridge area. So I would probably watch Eskay Mining and see if there's going to be another major slump in the general market that takes it down to a lower level and puts us closer to the point where that discovery hole news is potentially happening. But with regard to Aurion, I would buy that now. They're a 25% partner with B2 Gold in the Finland Central Lapland Gold Belt, where B2 Gold has a big program going on an 8-kilometer structure where the Helmi prospect, which is just on the other side of the property boundary from the Ikari discovery, 4 million plus ounces that Rupert Resources has made. B2 Gold has reported some results from drilling. They definitely indicate that it's mineralized on the Helmi properties side, but it doesn't yet have the scale of intersections to signal we've latched into another Ikari zone. But this is B2 Gold. It's a mid-tier gold producer. It's not going to put out news releases to help Dave Lotan's Aurion Resources just fade away. Aurion raised a lot of money last year, more than enough to participate with its 25% share. So the company's sitting back and waiting out what's going on. Let's see if B2 Gold can find an Ikari scale discovery on that 8-kilometer trend that projects from the Rupert ground. And there could be a news release tomorrow that suddenly says, wow, we have something that's very similar to Ikari. So I would buy that one right now. The stock has sagged considerably from some of the market is tired of waiting. It wants to see discovery news showing that it's game on. But since this could happen at any time, that's the one I'd own now. Eskay Mining, I would watch it very closely for a slump that's related not to the company's exploration results, but to what's going on in the bigger market. But Aurion, I think, probably has bottomed right now, and this is a good level to purchase it.
FPX Nickel is up 6%, one of only 2 KRO favorites for the year. What's the outlook for FPX Nickel?
Well, FPX Nickel is my favorite advanced nickel project based on the PEA numbers that they published in 2020. Nickel prices had a really crazy ride this year. On intraday basis, it hit $40 a pound, though those trades ended up getting canceled. It was caused by the stainless steel producer Tsingshan, who had shorted LME nickel because it was going to be producing a lot of nickel matte from its Indonesian operations, and that's made from laterite ore, and this nickel never really ends up in the warehouses. It feeds the nickel pig iron market to make stainless steel, and they had done sort of a crossover transaction, but weren't expecting, I guess Xi Jinping hadn't told the leader of the company that Russia would be invading the Ukraine, and all of a sudden the Norilsk refined metal would not be ending up in the LME warehouses, and this created this short squeeze that took nickel up to $40, though on days where it was allowed to close, it never got much higher than $21. It has since sagged. In fact, today was a bad day. It was down to $8.75 a pound. That's still $1 above the $7.75 base case price. And if you run the PEA numbers, we're still looking at a future target price of $9 to $19 for FPX Nickel. The reason the stock's here in this 50-60 cent range is the market is unfamiliar with this idea of a 65% ferro-nickel concentrate that can be fed directly into the stainless steel mills. And this is produced from ore that's only 0.12 to 0.14% nickel. That would be the lowest grade nickel ever mined. But it's a different style of deposit. It's not like these ones which are low grade sulfide mines where they're hoping that economies of scale will make it work. This is awaroite, which is a natural stainless steel, which lends itself to a much simpler flow sheet of grinding and magnetic separation and then flotation of the concentrate to produce this product. Now, the exciting part about this story is they are doing metallurgical research on producing a nickel sulfate from this concentrate. And this would be battery grade, and it would be from a verifiable source. So if anybody wanted a clean source of nickel sulfate for their electric vehicles, having dibs on the output from the Dakar mine in central British Columbia, that would be a very smart thing to do. The companies also this year announced that all those reject deposits or systems, ultramafic ophiolites that they had assessed in the past 15 years, they had gone back in there and they're going to acquire these deposits that don't have any nickel in them and therefore are worthless as that. And they've sort of realized that we could turn these into carbon capture systems, because these ones that they're going after, they have a magnesium mineral called brucite, which is very, very effective at absorbing carbon dioxide and packing it away permanently as a carbonate mineral. And in fact, even the Dakar project itself, where the Baptiste zone is, there's a chance that it may end up carbon neutral because the tailings absorb carbon dioxide, and they're doing studies that now to establish, well, how much would be packed away, and can we use this as an argument as to why this project rather than some other would be developed. But the main thing that could perhaps move the needle in the short term is they have a 3,000 meter drill program on the Van discovery, which they confirmed last year. It's got similar scale to the Baptiste deposit, which itself will be 35 years of mine life at 120,000 tons per day open pit. And they're now assessing the other half of the Van target with drilling. And if they can confirm that, yes, indeed, we do have a somewhat better grade, and the coarseness of the awaroite is also the same, that could end up substituting for the Baptiste as the initial starter pit for a future mining operation. They hope to have a pre-feasibility study done by the end of next year, but for now they're working on the metallurgical studies, riding out this market slump, and working on showing that at a minimum the whole Dakar project has 50 to 100 years worth of this nickel content in this relatively benign host rock that also has carbon capture potential. So I think at this price, FPX Nickel definitely deserves to be bought, and I do not think that nickel prices are going to sink much below current levels. The warehouse stocks, they are not quite as low as they were in the 2008, 2006, 2008 period when nickel hit $25 a pound. They're not as reliable as, say, other metals such as copper, because much of the nickel, pig iron nickel that feeds the Chinese stainless steel market, it never sees a warehouse. It goes direct from the being produced to the blast furnaces to be turned into stainless steel.
Northwest Copper and P2 Gold, both with advanced copper projects, are down 62% and 47%. Has anything gone wrong except the price of copper?
It is largely the price of copper that is to blame for the slump in these two companies. Copper's ranged between $4 and $5 a pound since the start of 2021. But in the last 4 weeks, it has broken down. It's now $3.20 to $3.30 a pound. And the copper price is seen as a bellwether for the future, economic activity. And the way copper is behaving, it's suggesting that, yes, the Federal Reserve is going to engineer a hard landing for the U.S. economy, but it's also reflecting the fact that China is undergoing this self-inflicted zero COVID policy slowdown. So, and the copper stocks in the warehouses, both Shanghai and LME, they are about as low as they were in 2008, and those are real numbers. So you have to believe that there is a major recession, global recession coming, to believe that these copper prices accurately reflect what is going on. And the other thing with copper is this doesn't even take into consideration the reality of the energy transition. And maybe what's happening is the market saying, okay, the Supreme Court of the United States basically said government agencies can't set policy related to the energy transition. We've got the Democrat name owner only Manchin in the Senate blocking anything that isn't pumping fossil fuels. So everybody's looking at the United States and saying, you're going to probably lose everything in the House and Senate in the November midterms. So you won't be able to push the climate change model at all. It's going to be just fossil fuel. Right now, the concern is, do we have enough oil and gas to keep everything going just the way it was, let alone worry about new sources of energy for the energy transition. So this whole idea of copper undergoing a new demand increase as a result of the electrification of the car sector, maybe the market's saying, probably won't happen. We are dealing with an end-timer party that's in ascendancy in the United States. They control the Supreme Court. We may not see that new demand for copper develop. And yet at the same time, you look at the conflicts around the world and the idea that this tussle between autocracy and democracy that China and Russia are having with the United States. And I just can't see Russia or China backing down. And I can only see a fragmentation of this global economy and a push to find resources in secure jurisdictions. So companies like Northwest Copper, which has the Quenica Stardust project in central British Columbia, and P2 Gold, which has the Gabs copper gold project in Nevada, both are advanced projects. They're at feasibility demonstration stage. Northwest Copper is drilling about 30,000 meters split between the Quenica Stardust deposits in preparation for a PEA that combines feeds from both deposits. And they also have the East Niv copper gold discovery that they made last year. They're going back in there and further sorting out what's all going on. So there could be discovery news coming from that. And P2 Gold, which hopes to have a PEA out for its Gabs project, it obviously is not being helped by a declining copper price, but who knows by the time later this year where copper is. But right now, that stock shouldn't be sagging. They're just starting the exploration drilling on the BAM project where they confirmed a gold discovery last year. But the big upside is as they chase the BAM system down deeper, that they show that there is a substantial and rich gold resource in this part of the Golden Triangle, better location than Galore Creek, but similar type of system. So this could be flowing positive news from BAM in September, and the stocks being pushed back on the assumption that, well, there's nothing going to come from that, and also that copper, well, it's going to be down for the count, so GABs may end up being marginal. And so you can make a relatively cheap bet right now that will not be the case. And the same as with Northwest Copper, that PEA that they hope to produce combining the two projects. We should have that sometime next year. And the East Niv itself is a wild card. And they're also going back into the Lorraine project to try and sort that out after Teck spent a decade or so sort of poking away at it without really putting it to the test. So both P2 Gold and Northwest Copper are good buys at their current prices.
Verde Agritech is up 139% for the year, though that is just over half its peak earlier this year. Are you still bullish on Verde Agritech?
I continue to be bullish on Verde Agritech, and I have to admit that, that the KRO favorites are down 19% for the year, but that it could be much, much worse if it weren't for Verde Agritech, which at one point was up 280%. And I talked about it a fair bit last week, so I won't say too much now. But the big news that happened yesterday is that the shareholder approval for redomiciling from the United Kingdom to Singapore, that was approved. It'll be implemented later this month. And that sets the stage for this company applying for NASDAQ or New York Stock Exchange listing, exposing it to a much bigger audience. And if their guidance proves correct, this company will have done $100 million worth of revenue in 2022. This is going to become a serious company. And again, many of these stocks are being sold off just because people are worried about the future. They're seeking liquidity. They're seeing their other investments go up in smoke. And so anything that has any sort of liquidity and that is up, it's being sold. If there's any concern right now hanging over the Verde Agritech market, it's what's going to happen in the fall when the presidential elections are done. The current president, Jair Bolsonaro, he has been consulting with the Trump organization on how to stop the steal before it happens. Part of the prep work that he's done is to try and get the military on side to view any election outcome that isn't in favor of Bolsonaro as a false and stolen election requiring military intervention and restore a military dictatorship in the United States. That probably won't happen. The military really doesn't want to go back to the 80s when it ran it as a thug dictatorship. And the other concern people have is that Lula, who is the primary opposition, that he ends up in charge and goes on some sort of revenge warpath for having been put in jail for a couple of years on corruption charges. But some of the thinking is that no, he probably will be on a redemption warpath and will want to do a really good job and not do crazy things that upset the economy. And so my bias of concern is more like, does Bolsonaro, if he loses the election, does he declare it as a stolen election anyways in the way? And you have to take this seriously. 52 million Americans think that the election was stolen from Trump, even though there is no evidence in that. And there are plenty of Republicans who agree that there is no evidence that the election was stolen. And yet you have this mindless, crazy belief that if your favorite thug is not reelected, it must have been stolen. We have to worry about that in Brazil, that some sort of chaos happens there. Hopefully if he does lose, he just goes peacefully, and we have a transition back to the Lula administration, and all of this doesn't disturb the alternative potash plans of Verde Agritech, and whether it's Bolsonaro or Lula fairly elected in charge, none of that affects Brazil's need for a domestic supply of potash. So the only thing that worries me is the risk of violence and chaos and perhaps military moving and destabilizing Brazil as a democracy.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.